All right, let's just jump right in. Take a look at that number. That's the price of one Bitcoin as of September 17th, 2025. It's up, it's climbing, and believe me, the entire market is watching very, very closely.
But that leads to the million-dollar question, right? What's actually pushing this number up? Because it's not just random. There are some powerful forces at play here, both from inside the crypto world and, well, from way outside of it.
And that is exactly what we're going to break down today. Welcome to The Explainer. We're looking at what I'm calling Bitcoin's watchful weight. It's a story all about anticipation, big money, and a single decision that could literally change everything.
So to really get where this is all going, we first have to understand exactly where we are, right at this moment.
Here's the immediate situation. Bitcoin's hitting highs we haven't seen in almost a month. Now, this isn't just a small bump, it's a really significant recovery. It's clawing back all that value that was lost just a few weeks ago in late August. You can kind of feel a renewed sense of optimism in the air.
But this optimism isn't just coming from the usual crypto circles. The real reason for this market mood? It's coming out of Washington, D.C. All eyes are glued to the U.S. Federal Reserve.
See, the Fed's whole job is to manage the U.S. economy using something called monetary policy. In simple terms, they're the ones with their hands on the levers that control the money supply, basically deciding how cheap or expensive it is for anyone to borrow money.
And this brings us to the crucial point. The market is making a huge bet that the Fed is going to cut interest rates. A rate cut makes money cheaper, which floods the market with cash, or liquidity as the pros call it, that often flows into riskier assets like crypto. If they hold the rates, though, the opposite happens. Money stays expensive, and there's less of it to go around for investments like these.
And this isn't just some wild theory. We've seen this movie before. This timeline shows it perfectly. After COVID hit in 2020, the Fed dropped rates to practically zero. And what happened next? The insane 2021 crypto bull run. That whole thing was fueled almost entirely by that cheap money. So you can see why, today, traders are looking at history and hoping for an encore.
Okay, so that's the big picture from traditional finance. But what is the crypto world itself telling us? Well, we can actually look at the blockchain for some really fascinating clues.
The first major trend we're seeing is a kind of exodus. A huge amount of Bitcoin is being moved off of cryptocurrency exchanges.
And I'm not talking about a trickle. We are talking about the lowest level of Bitcoin sitting on exchanges in well over a year and a half. So why does that matter? Well, think of it this way. When Bitcoin is on an exchange, it's ready to be sold. When it's moved off, it's usually going into private storage, a cold wallet, for the long haul. Now here's where it gets really interesting. While all that Bitcoin is leaving, another type of asset is arriving in droves, stablecoins. These are the crypto tokens pegged to the US dollar. They're basically the cash of the crypto world. So let's connect these two dots. You have less Bitcoin available to be sold, which means less potential selling pressure. And at the exact same time, you have more cash or dry powder flooding onto exchanges, ready to buy something. This combination is an incredibly powerful signal. It strongly suggests investors are getting their wallets ready, positioning themselves for what they think is a coming price surge.
Now, all this short-term anticipation is happening against a much bigger backdrop of long-term changes. While all eyes are on the US Fed, other major powers like the UK are making regulatory moves that could shape crypto for years.
Britain's top financial regulator, the Financial Conduct Authority, is actively trying to make the UK a global hub for crypto. Just as their executive director, David Gill, puts it here, the goal is to balance innovation with trust. In other words, they want crypto companies to come and set up shop.
And to do that, they're proposing something pretty radical, exempting crypto firms from some of the core principles that every other financial company has to live by. We're talking about fundamental rules like acting with integrity and putting your customers first. Relaxing these foundational requirements is a powerful signal that regulators are willing to create a totally separate, more flexible rulebook just to attract innovation.
So, with Bitcoin on the move and regulators making big plans, what about the rest of the crypto market? What are the thousands of other coins, the altcoins, doing?
The short answer, not a whole lot. The rest of the market is basically frozen in place. From Ether to XRP, everything is stuck in an extremely tight range with just these tiny little fluctuations. It's as if the entire crypto world is holding its breath. And the reason is simple. No one is willing to make a big bet until they hear what the Federal Reserve decides. Think about that. This one announcement from a traditional finance institution has put the entire supposedly decentralized crypto market on pause. Everybody is on the sidelines, just waiting for the signal.
And this leaves us with a final, and I think fascinating question. For years, crypto was sold as this alternative to the traditional financial system, right? An escape. But today, its fate seems to hang on every single word from a central banker. So as these two worlds continue to collide, you have to ask yourself, which one will ultimately hold more power in shaping the future of money?